Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Thanks to Dr. Rimmer and to the Konrad Adenauer Stiftung. They have been very strong and steady supporters of the Institute for several years. Now, Ashok, you, I think, put your finger on it by saying that it is very difficult to separate the border issue from the economic ramifications. So we have to tread a very strategic and narrow path, which in my view encapsulates all three elements of what you have suggested. Decoupling, but not entire decoupling, strategically chosen, reduced dependency, but again selective, and a new equilibrium, or I may even call it a dynamic equilibrium. And I summarize that by calling it economic growth with leverage on China. So let me explain that. We have our Independence Day coming up in a few days, and it's worthwhile recalling that right from 1947, every government of India has had one goal. Whether they have described it in different languages beside the point, but that goal has been the development of India and prosperity of the Indian people. And that has to be uppermost in our mind. Now, right now, when we tackle that goal, we have the issues of COVID, which is a big problem right now with us. We have the economic downturn, which COVID has made even worse. And now we have the challenge from China expressed in very strong terms, which we have felt over the last 6 weeks or so. So how do we navigate this situation? Ajit has, I think, very nicely spelled out the dependencies and interconnections between the two economies. China is, after all, about 28% of global manufacturing. Right now, it may even be larger because the rest of the world has shrunk relatively compared to China. But in manufacturing, in other terms, it is going to be a very big player, and we cannot ignore it. Neither can we ignore investment from China, because investment is not going to come easily from anywhere else right now. All countries are constrained. They are looking inward. They are rebuilding themselves. The World Investment Report has in fact said that they expect a 45% fall in investment. And I mean FDI, not hot money, in FDI to emerging countries in this year, 2020, because of this situation. So we cannot be very choosy about where we get investment from. So we have to navigate this again very, very carefully. At the same time, we have to exercise leverage with China in a very calibrated way. And let me explain this. Leverage has got two parts: positive leverage and negative leverage, or positive incentives and negative incentives. And they both work only in the presence of the other. Let me give an example. If the Chinese investment in India has grown, and it has grown rapidly in the last few years, particularly in the e-commerce, digital, and other spaces, it is because China has seen India as a big opportunity. In their view, India is a country which is following about 10 to 12 years behind their own development path. So whether it is mobile phones, whether it is digital, they have been down this path before in their history, and they think a large developing market like India is one where they can deploy their experience profitably. So India is a very interesting market for them. This is what I call a positive incentive. The denial of that market becomes a negative incentive. But if you turn it off completely, then it is no longer, it no longer works. Similarly, for investment. So they have to be balanced And therefore, this is a positive negative sway, a kind of dynamic equilibrium to focus upon your third alternative that you have given in the abstract.